we are going to get started. And I just want, before we get too far in, I want to let you know this panel is going to go for 2 hours. And if you want to see Scottie Pippen, you're making a big mistake. You should spend 2 hours with us.
And there's a
quiz.
This
is going to be way more fun. I've talked to these guys for a while now. Our stories are much, much better. Thank you everyone for coming. My name is Brad Henderson. I am the CEO of P33. It has been a really fun week, and we're grateful that everyone's come out. And this is really I guess you call it the ending fireworks here the next few hours, and I think this panel will definitely be part of it. We want to talk about something I think is very unique to Chicago and an incredible part of our history, which is our trading community. And so what I think you're going to get from this panel a little bit is how something, when I moved to Chicago 26 years ago, was really populated by, does anybody remember the people in weird colored vests that just ran around downtown all the time doing what they did? Well, this is it now. It's technology. And so those jobs and that industry that really has been a core part of Chicago's entire history is really now dominated by super smart, very creative, hardworking technologists, when it used to be tall people, and I'm very tall, doing things like this. So what we're going to try to do right now is demystify that a bit. And to start, I was just going to have these guys introduce themselves. And what I'd really appreciate as you went through it is just to tell a little bit about where you're from, how you got into this. Because I think some people in the room may know exactly what this is, and others may have never really thought about this before. And so just a bit more of where you're from, how you got into this, and what the company you work at now does, and what your role is there. So Nate, why don't I start with you?
Thanks, Brad. Just to start, so I can gauge how we can talk to you guys. How many people in this room have traded a share of stock before? Okay, good number. We're all in the plumbing of that, so we'll have a good shared understanding. So my name's Nate. I've worked at my company Wolverine for about 11 years. I started there directly after attending the University of Chicago on the south side. I started in trading after a background in some biotechnical quantitative research. So I did basically analysis on data related to like what's in your blood, and I basically identifying different characteristics, trying to detect signs of different illnesses. Did that for a few years, and what I found was very interesting about trading was the data sets that we were performing analysis on were all, in some form or fashion, a human intention or like a human decision-making process, and that all of those decisions and ideas and intentions were kind of collecting together in this one place that was the marketplace. And I found that very fascinating from the perspective of being a statistician or a researcher in that kind of space. I did that for many years. I was also the guy who kept wearing a tie to work, and so now my job is more being the guy who wears a tie to work and sitting in front of you while I'm talking to you today. So with that, I'll hand it to Andrew.
Hello, my name's Andrew Hankins, and I'm the head of options technology at a Dutch market maker called Optiver. I'm originally from Sydney, Australia. That's my hometown. And before I joined Optiver, I was working in software-defined radio. I didn't really know much about the trading industry or trading firms at all, but I had a friend working at Optiver, and he said it was a great place, lots of interesting problems and lots of interesting people. And I found myself looking for a new job, and so I applied, and I was really impressed by the people working there, and so I joined. And then right before the pandemic started, I made the decision to move to Chicago. And like was being mentioned before, Chicago is like a really special place in the trading world. There's a lot of history, there's a lot of companies that come here to trade, and so I wanted to be part of that trading industry and that trading history. And yeah, I'm glad that I moved here, and I'm glad that I'm part of that. Yeah, and I think the interesting problems in the trading industry is there's a real intersection between a bunch of different disciplines. So mathematics, engineering, and computer science all need to come together to make the plumbing of the modern day markets work.
I'm Jonathan Morley. I'm here from CME Group. I've been there approximately 13 years. I grew up in Michigan and went to a school in a really small farm town area, and then moved to Chicago, stayed downtown for one summer, and then headed south towards Kankakee to another cornfield, where I've lived for a few years now. What initially drew me to CME was two things, really. First was the scale. I was amazed that people were talking about measuring things to the millionth of a second. And also, I knew nothing about finance. I come from a computer science background. This is a financial services company. And I was amazed to learn that everything from the cereal that I ate in the morning to the car that I drove to work all relied on this thing called financial markets that I had never really heard of, or commodities. All of these terms were new to me. Folks at CME were so excited to talk about these things and explain what they meant. And it's been 13 years. I've never looked back. My role today is primarily cost optimization. So how are we spending our money? How could we spend it differently to achieve more? And I'm really grateful to be here today. It's been an excellent event, and I'm looking forward to hearing more from our panelists.
Great. Thank you. I wonder if you guys can talk a little bit about, I think when a lot of people think about options trading, high frequency trading, all of these things, it almost sounds like a video game that doesn't really matter. And don't take that personally. I just think that is something someone might think if they don't know anything about it. I think one of the things that would be really interesting to learn from the three of is, why does it actually matter in the real world? What does it mean for the economy? What does it actually do? Why is it that what CME has done for, it's probably over 100 years old? What sort of value does it bring to our economy and to society beyond the digits that you're looking at in a computer? What does it really mean for people out in everyday life? You want to start? Whoever wants to start, feel free.
I can start. Cool. That's a great question. Thanks, Brad. So there's a lot of different reasons that people enter or participate in the financial markets. The most obvious and oftentimes the most controversial one is what is described nefariously or as gambling, or that the stock market is intended purely for gambling. What we try to stress, at least, and especially in the derivatives markets, is that there's a lot of different reasons people go to the derivatives markets, futures, options, and others to trade. Oftentimes, and if not as often, they're entering those markets and participating in those markets to help manage real risks to businesses that exist across a broad swath of industries. So the classic way that the classic reason for the CME Group's existence is for farmers to be able to price or accurately predict how much they're going to be able to sell their crop for at the end of the year. They're raising one crop of whatever product they might be producing throughout the year. They'd like to lock in that price in advance, and that's a classic product that is the CME Group's a core value. So for us, all of us in this room use financial products for a lot of different reasons, even when we're not thinking that we do. Our car insurance is a financial product. Our mortgage on any property that we own is a financial product. And those are synthetically very similar to the kinds of products that we trade in the financial markets. Ours are maybe just a little bit more abstracted from those more common things that you're familiar with. So what we think we bring is probably more transparency and more consistency to those prices across the board, but I'll tee that off to you guys to keep talking about.
Yeah, I think that's a great question. And when I first joined Optiver, that was one of the questions I had is what value are we providing? And I think a really short summary that was given to me that I really like is we are living in a capitalist society, and the efficient transfer of capital is really important in a capitalist society. And effective financial markets, facilitate that effective transfer of capital. And so it is a little bit abstract when it gets down to the actual financial markets, but having a really efficient engine at the center of our society is really important. And that's why every day on the news, you'll see, hey, here's where the stock price is. This is where the Dow is. This is where the S&P 500 is because they're the foundations on which our society is actually built.
And a lot of these terms can seem fairly daunting face value, but all of you have participated in a financial instrument, likely. Those that have ever entered into a rent contract to live somewhere, that's essentially a futures contract. You're deciding today on a price in the future for something that you're going to receive. Now, when you take the scale and kind of blow it out, most of you are probably not buying millions of bushels of corn or huge barrels of oil. You certainly could. I don't know that I'd encourage it. But it's derivatives, right? So you take this product and you derive something of value from it. You trade that at a massive scale. the markets don't really stop either. That was another thing that drew me to the exchange. So nearly 24 hours a day, nearly 7 days a week, these contracts are being traded, risk is being managed, prices are being checks and balances in all of these different areas. So for example, while we've been here today, our exchange has facilitated 28 million contracts. That scale just blows my mind every time I think about it. And I see it when I go to a gas pump. I know that price was fixed for me by people participating in a market, all looking to manage risk in a different way.
Great. And I am going to do just one quick plug for the role of an institution like CME and its significance in Chicago history. Because I do think it's easy to walk by your headquarter building on Wacker and like almost miss it. And
it's a
teeny little sign. And it has, if you've heard of this trading company Robinhood that's in the newspaper all the time, CME has 6 times the market cap. It's a $66 billion market cap company that we sometimes take for granted. And just for what it's worth, if anyone buys gas today, anyone uses their stove today, anyone uses corn today, anyone wants a mortgage today, those prices are actually, in many ways, just settled and determined by a set of folks who are based right on Wacker, and it's easy to literally walk right by it. I wonder if you could do something else. So I think there, and a little plug, I have 2 aspiring workers in the front, my kids. For people who maybe are thinking about working in the fields that you guys work in, would you recommend it? What's the job like? And if you want to be prepared to get such a job, what are the types of things you need to do to make yourself attractive to do that types of work?
We gonna do this right to left thing again?
Yeah, it's been working.
It's been working.
I like it. It's working for us.
All right. I'll start with this. The degree to which our firms are at the forefront of all of the buzziest technology that might be like, whether it's crypto this year or blockchain last year or machine learning a couple of years ago, our firms are as aware and plugged into those types of technologies as the sexiest Silicon Valley tech company might be. We tend to just move a lot more carefully with respect to how we advertise how we invest in those technologies. And we also don't hire and fire 10% of our engineers at once because we over or under invest in said types of technologies. Those things are very integral to everything that we do. And as generally speaking, conservative, and at least in my and Andrew's case, private proprietary trading firms, like we're very conscious of how we invest in our people, and which is not to buzz on CME at all. We intentionally make long-term investments in all technologies related to trading, whether that be statistical or that be more on the raw computer science side. And then if you lay on top of that, learning a lot about finance and just the business of finance. I mean, finance is something that affects every one of us in significant financial transactions over the course of our lives. And that combination, to me, was always very appealing.
Yeah, so I think like a couple of pretty fundamental things that are a requirement for, I think, getting into proprietary trading is like a real desire to solve problems. And I think you need to be quite competitive. It's a pretty competitive industry, and it's a bit of a competitive game that we're playing against one another every day. So if you're not interested in solving problems, then you're not very competitive. You're not going to have a good time at work. And then, like we were mentioning before, like things are measured in millions of a second. Details really matter, and so I think we really like people who come along with deep fundamental understandings of engineering, of mathematics, and of computer science. Because, even though we're not advertising it and we're broadcasting it, we are actually at the cutting edge of a lot of physical data. And computing problems, and we have large groups of people sitting down and solving those problems together every day. And so if you find yourself as a person who likes problems, you're quite competitive, and you enjoy like fundamentals of mathematics and engineering, you'll love proprietary trading.
Continuous education is probably the biggest thing that we would look for. CME by all accounts, is a pretty lean organization, right around 3,500 employees. The majority are Chicago-based, and also the majority of those 3,500 are technology employees. I've been there, again, 13 years, and when I kind of survey my immediate peer group or similar professionals at the same stages in their careers, what I tend to notice on LinkedIn is, a job change every year or two, a different company here or there, a new title, a new role, doing something entirely different. I think one thing CME has done an incredible job with is making those opportunities available within the firm and not needing necessarily to change companies to go somewhere else to try something new. Whether it's a formal career change or role change or something that's just a little temporary dotted line relationship peeking over someone's shoulder, that's what's kept me at the firm. I never would have expected 13 years ago to be in a finance role by any stretch of the imagination. I was a computer scientist at heart, software engineer by trade, and now I'm in a finance role. I didn't have to leave the company to do that. Not only was I supported into that kind of career change, if you would call it that, but it's a direct product of continuous education, continually learning, always asking questions, and I think that probably holds true for the other panelists as well. Everyone is willing to share their knowledge and learn from you at the same time. It's pretty incredible.
Thank you. Okay, so this is a tech and innovation conference, and so this is a stretch tech question for you. I'm sure there are things that are on your roadmap that you guys are thinking about that you know the answer to the next 6 to 12 months. But if we think about the problems you don't have the answers to yet, the things that are coming in the future where it's going to take a lot of what your firms are good at that you haven't figured out yet, to really rise to the technological moment. And I just wonder if you can offer any thoughts on, over the next 3 to 5 years, the types of big technology questions or innovation questions that your firms are going to have to tackle in order to stay on the cutting edge. You talked about how competitive your market is. I presume there's an element of, if your tech is slightly better than his tech, you make a little bit more money, or vice versa.
Yeah,
are you going to say it
happens.
is?
And that's what happens. That technology is better.
This could be fun.
We like to refer to it as who's taking whose lunch money today.
Okay, I like it. That's all right. And as we know from Chicago, there's no such thing as a free lunch. It's actually his lunch that's being eaten by you. So I just wonder if you could offer some perspective on a little bit beyond the day-to-day, the big things you have to think about in the future in order for your firms to stay on the cutting edge.
This one's a harder one to start with. Okay. So there's a broad class of problems that maybe I could answer, but not in a public forum, right? And that's one challenge.
Is the CIA or the FBI involved?
No, more of the gentleman I'm sitting next to, for the same reasons we were just joking about.
Yeah, I'm looking forward to hearing about Wolverine's technology roadmap.
See, but what is I guess fair to say? I was trying to think about in the abstract, like how you could describe this to someone looking at it from the outside. There are a lot of problems that are shared across all three of our firms, with respect to handling the scope of the data that we need to process and gleaning ever more information from it. The little soundbite you can take away is, at least with respect to equity options, which are the class of securities that I focus on most, the amount of raw text data that is produced just in terms of market data is greater than, the last I ran the numbers about 5 years ago, 2 times the full size of the Library of Congress every day. And it's text, it's not like movies, which, as you know, are much bigger files. So the amount of data that we are processing is growing at not a exponential rate, but is at a surprisingly slowly sloped logarithmic rate. And that is something that we all have to process, not just from the perspective of all of our regulatory requirements. So we have, we are a highly scrutinized business, and we are constantly, like, we need to save all of this data because it's the law. But it's also like gleaning more and more insights from that data and trying to develop new and innovative ways of using it to make more intelligent trading decisions.
Yeah, I would echo that. Like the amount of data that's being produced is just mind-boggling. I feel like it does double every year. We're always doing projections. How many data, like how much hard drive, how much space do we need? And every single year it surprises me that it truly does double. And it's almost like a generative thing. So like more data that comes in, the more decisions we can make, the more data that we put back out and therefore comes back in. I think something else that's like really interesting is, I know everyone's saying like AI is a bit of a buzzword right now, but I think generative AI has been, a real, mind-blowing sort of development this year. But the race is on, I think, in the trading space to figure out how can we take some of these really massive models with all this data and then produce something that's actually accurate. Because when ChatGPT gets something wrong, it doesn't matter. The human on the other side will fix it up. If a trading system gets a decision wrong, you lose money, and you lose money really quickly. So I think there's a little bit of race on the next 10 years for companies to really figure out, like, how do we build something like ChatGPT that can trade at the lowest latencies, can scale to insane amounts of data. I think that's going to be a really exciting development.
One interesting challenge and problem that we kicked off a little over a year ago, we signed a 10-year partnership with Google Cloud to migrate all of our infrastructure, all of our systems and applications to a public cloud provider. And I think that brings a host of challenges with it. Not only challenges on our firm side and how quickly we can migrate, how quickly we can learn and iterate how to migrate literally hundreds of applications in 500,000 square feet of data center to a public cloud. I think that's going to bring some really, really unique challenges, more tangible challenges. How do you multicast in a cloud, for example, for the technical people? These are things that we're actively looking at, but they're challenges that we're excited to solve. One interesting example, speaking of data centers, we had built a facility out near Aurora, and we co-located customers there. So customers could essentially throw their servers in our data center, be as close to the matching engine as possible. And we guarantee to the centimeter that all of those cables are equidistant, because we're measuring the timestamps at the nanosecond level, the speed of light, and we want to make sure that no one has an unfair advantage simply because their machine's a little bit closer to where the information's trying to get. I think these challenges are going to continue to impress us at a technological scale, and I'm really excited to see what this Google partnership is going to bring right around the corner that we might not necessarily be expecting.
Yeah, and on CME's migration to the cloud, I think an interesting challenge is going to be whether the geography changes, because there's something really real about where an exchange is located in the world that matters, and that's why Chicago's kind of sticky a little bit in terms of like people come here to trade. And so I think if the migration to the cloud and like where does an exchange exist is going to be a really interesting sort of development over the next 10 years.
I wanted to pick on one technology in particular in your industry that I think gets people in very different camps, and that's Bitcoin, and I guess more broadly cryptocurrency. And your chairman and CEO has some funny, colorful comments about what he really thought about SBK as an example, Sam Bankman-Fried with SBF, but also had a product that I think is a very safe product listed that is well regulated. And I think there are probably a bunch of people in the audience who are really excited about Bitcoin, and then others who are very confused and wonder like why anyone would bother. And so I just wonder, it can be a bit of personal and professional, a bit of how you think and how your firm thinks. But Bitcoin's a big question for your industry as to what role it will play and to what extent should it weave into your strategies and what you do. I just wonder if you guys have any particular thoughts that you could offer on the role of Bitcoin in trading.
Yeah, so for one thing, there's both Bitcoin and then the broader digital assets ecosystem, to which a lot of the controversy and the questions that folks have had about Bitcoin and the digital asset space is a lot of this looks either nefarious or like a solution in search of a problem, where it's not entirely clear what a lot of these things would be for. The core model of Bitcoin certainly seems to have some viability, but if you want to ask, my personal opinion or maybe a more risk-averse opinion would be, it's hard to see how the U.S. government would accept a competitor to the dollar. That being said, it's an asset class that is highly tradable, and for that reason, we, myself, like Wolverine and other trading firms, we view it from that perspective. If there's liquidity to be provided, that's something we're always going to be actively looking at and with an eye both to the compliance and like that it's not going to harm customers, but also that there's opportunity for us to be able to provide value to that industry or that space.
Yeah, I think Optiver's position on cryptocurrencies is quite conservative. We didn't really jump on to the crypto train, and any sort of like interactions with the space has been very conservative. I guess it comes from a position of Optiver really wants to make sure how it's engaging with the broader community is always a positive one. And so when we weren't certain about what the impacts of people trading cryptocurrencies could be, we decided not really to participate in much. But if there is a market and people need liquidity to be provided, at some point Optiver will come in and help tighten up the spreads, help make sure that the transfer of capital is efficient. But I think we're really waiting to see how regulators view the product, whether it's actually a positive for society or not, before we dive too deep in.
One of our company values is to lead with conviction and integrity and advance the global economy. And I think what conversations with our customers have shown is that people are interested in cases in managing the risk associated with certain cryptocurrencies. So we do have a Bitcoin futures product, an Ether futures product. I think where there's a market, we're happy to provide kind of facilitation of those risk management practices. And longer term, it's going to be interesting to see how cryptocurrencies play out more broadly. Of course, there's 50 plus regulatory agencies that all touch money in the US alone, and we operate in 150 different countries. So I'll point back to scale. It's interesting to see how the scale blows out on a lot of these things. But the reality is where there's risk to be managed and customers that need a place to manage it, we'll be looking to offer a product or a service that can address that.
Okay. I wonder if we could turn the page a little bit to Chicago. And again, it can be a bit of personal and professional reflection. But if you could just talk a little bit about what are the strengths about Chicago that make this a good place to build your career and build a firm in the technology of trading futures, options, et cetera. And then in the spirit of trying to educate our audience, also to offer a little bit on what's the thing or two that you think Chicago really needs to be paying attention to or working on to ensure we don't lose any of that edge and that we continue to be a good place for the industry that you guys work in? So why Chicago, but what do we need to work on?
Okay, why Chicago? I can do a little bit of a little historical plug, and then we can talk about you guys can talk about maybe the more modern stuff. But Chicago has this rich sort of association with trading historically because of the Board of Trade and its 150-year existence, which has now evolved into what CME Group is today. It was the largest and most significant trading house in the United States, basically, with the exception of New York Stock Exchange and NASDAQ. And for that reason, and because Chicago Board of Trade had such an early emphasis on derivative products, Chicago was where a lot of the innovation in financial theory around trading derivatives arose. And that took place in part on the Chicago Board Options Exchange and the invention of kind of modern stock options in the 70s. So Chicago is literally kind of where a lot of these products existed. There's various forms that have existed back till ancient Roman times, and there's some cool history there, but modern American derivatives trading did kind of start here. And for that reason, there's a very rich intellectual as well as kind of social and competitive culture that is oriented towards trading and trading technology in Chicago specifically. And it's cool.
Yeah, I moved to Chicago to be part of this industry and this culture, and it's a real thing. There's a lot of firms here that participating in this industry, and I think when you're from somewhere where there's a high frequency trading industry in Sydney, but it's not as pronounced as here, you don't realize how important the relationships are between all the different firms and being able to be in contact with your peers at other companies. I think that's really important. I think also coming from a city where the cost of living is incredibly high, I think Chicago is like actually quite a nice place to live from that perspective. It's a global city. You have access to like all the like amenities you would have a nice city. It's got the beautiful lakefront, and then it's quite affordable for a place for people to live. I think it makes a really attractive package to bring, you know, lots of talent in. And I think if there was one thing that Chicago could improve on, it's the winters. I think if there's something that we could do about the cold, I think, you know, Chicago would be an awesome place to live.
You don't enjoy walking outside and having your face hurt. I'm surprised. I think the diversity of Chicago is my favorite part. Each neighborhood is a little bit different. There's food, there's restaurants, there's businesses. Everything is just slightly different and really caters to such a diverse audience. I think one improvement is also honestly one of our strengths, and that's transportation. We have 2 major airports, we have the CTA, we have Metro, we have tons of different ways to get around, but anyone who's ever sat on 290 in rush hour knows that there are improvements that could be made and ways to do it better. I would say the more we go kind of hybrid / return to the office, it's interesting to see how the transportation element's going to change, and there will be some fun challenges for the city to solve in that respect as well.
Okay, thank you. Okay, so the next couple of questions I'm going to ask, maybe just one of you take, because you know the title of our talk is Demystifying Financial Technology and Trading, and so I'm going to actually ask some basic questions. We're looking for sort of like basic explanations, so that if somebody here is not in the business of doing this every day, they have a better sense of what it is. So can someone just say, I kind of get the notion of going on a brokerage account and buying or selling a stock, but to trade options, what is that actually? Like, walk me through what it means to trade an option in the way that your firm does. And you don't need to get into the intricacies of, you know, theta and all of the, you know, options pricing, but just, I don't know anything about it. Walk me through what it is that you actually do when you trade an option or a future.
Shall I take that?
Give it a go. Yeah. Yep.
All we do at Optiver.
Your answer will be way better than mine, so just go for it.
All our systems and all our technology at Optiver translates sophisticated financial instruments into a decision about buying something when it's cheap and selling something when it's expensive. And that's it. So like, options are complicated products, and there's lots of mathematics that goes into how you should price them. But at the end of the day, if it's cheap, you should buy it, and if it's expensive, you should sell it. Just the same as the way you think about, if I'm going to buy a stock, I'm going to try and buy it when it's cheap, and when it's gone up, I'm going to try and sell it.
I can add a little bit about options, but certainly not investment or trading advice. An option is the right but not the obligation to buy or sell something. It's kind of simplicity. Think of car insurance. You pay a premium to have car insurance. If you get into an accident, you can exercise the right to have your insurance cover your accident and repay you for those damages. You don't have to, certainly, but either way, you've paid that premium to have the insurance and the coverage to make the decision or to have that decision to be made. I would kind of leave option as that.
And the next one, maybe each of you answer in your own way. Again, I remember when I moved here 26 years ago, I got a sense walking into the Board of Trade what everybody was doing. Like, they were standing and they were yelling and they were moving their hands. On a daily basis, what is your day? Like, okay, I get it. There are computers, there's buying stuff, there's selling stuff, but like, how do you do it? What is sort of the typical makeup of each of your day to be successful and good at actually leveraging technology to trade futures, options, and other financial products?
Okay, so my current role at Wolverine is probably a little bit different than these guys. I am very sort of client-oriented or client-facing, externally facing to Wolverine. We have a business that essentially provides a back end to the Robinhoods, Schwabs, and Fidelities of the world. It's an order execution services business. What those companies do when you trade options in your Robinhood or E-Trade account is they benchmark how much savings Wolverine versus our competitors give back to you on your trade and route more or less orders based on that information. So I'm usually working with our clients, those representatives of those firms, to help understand their reviews of our process and communicate that, translate that into internal strategy for our team to help deliver a best execution experience to our customers. So it's actually in a customer-facing role. Apart from that, I touch a lot of relationships with our exchange groups, such as the CME and other firms. So I actually spend a lot of my time on the phone and in Excel, which is very backwards from being a technology firm. But I'm the guy who does all that stuff so that our newer, smarter analysts are able to work on the core business of trying to maximize our opportunity in executing order flow.
Yeah, so a modern exchange is a computer, and a modern exchange participant is another computer with a wire in between them. And the exchange sends us a message, and my job every day is to write an application, to write a piece of software that receives that message and makes the decision about whether to send an order back to the exchange, whether to buy or sell something. And that's really what it comes down to, is you just build more and more sophisticated pieces of software that receive messages and then send messages back. And yeah, that's it.
And everything these two panelists just described consumes computing power, and my role as cost optimization is to help them do more of their job using less of the resource, which ultimately spends less money for the firm.
And then just one sort of parallel follow-up on this. So that's a typical day. Knowing some of the friends I've had who've been in your industry, it's actually the atypical days that are the most fun. And yeah, I've heard stories about, I actually had a friend who was in your business who went on a nice honeymoon during the height of the Great Recession on the biggest trading day, I think, in the floor history. Came back, all of his friends are rich, and he'd missed the entire moment. And he quit that day, and he said, I can't come back here anymore, because there are days, I understand, that are just truly exceptional moments because of the level of chaos and volatility that occurs. And so, and part of what you might answer is, given what I do, it's actually still a pretty calm day. But if you think about the beginning of COVID, if I recall, there were some days there where the market was moving 10% in one moment and no one knew what the hell was going to happen. And we've had many moments like that over the last decade, 2 decades, 3 decades, et cetera. So you can either answer it specifically, what have you experienced on some of the crazier days in your industry, and what's that been like? Or, that's actually not my craziest day. Let me tell you this story about the craziest day I ever had that wasn't about market volatility, but was about something else. So not your typical day, but let's call it your most atypical day, and what was that like and why? And not everyone has to answer it, including like a crazy client dinner.
Yeah, there's been a couple of days, I guess, like whenever there's like some sort of financial instability, trading volumes go through the roof. And I think on those days, like your software, your application gets tested. And if it doesn't work, the market doesn't stop while you figure it out. They keep trading. And it becomes a real race to figure out what the problem is, get back in the game and start, participating, trading again. And that's when software development goes from being, it's not leisurely, but you can take your time, to being like, I got to get this thing figured out really quickly, or the company's going to lose a significant amount of money. And I think like over the last decade, COVID was definitely a massive one. There was just weeks where, things were just like all over the place. That provided a lot of interesting trading. Volmageddon in 2018, when the VIX imploded, that was pretty crazy. In 2015, there was also like a financial crisis in China, and I was in the APAC region. That was quite exciting. That's also when market makers are most important, because when prices come unstuck, that's when people who are there can provide liquidity, can actually ensure that markets continue to function correctly. So yeah, there's some of the more exciting days, but there are also some of the days where we really do earn our keep.
I'll take this and then I'll let you close it, because I'm sure yours is more exciting. Our engineers you can feel the sense of pride on the hectic days that you're describing, because our engineers are so conscious and think so much about the what ifs. What if we have 3 times, 4 times trading volume? What if our average peak is tripled in a minute? Our engineers spend so much time thinking about that 0.001% of cases to make sure that it is a seamless experience for our clients and our customers. And when those rare events do happen and our systems perform incredibly well, everyone is smiling, and it's a really, really good day.
Just so I think one way in which what both of these guys have referred to it analogously is like days where the market is volatile. Our concern is oftentimes with respect to the risks that we are shouldering as market participants and ensuring that our software and our risk management decisions are essentially not necessarily catastrophic or something like that. We work in an industry where a company can cease to exist in under 20 minutes. And we work very diligently towards designing risk management practices that ensure that that never happens, but we have seen many other firms have that happen to them. I would, however, distinguish the way in which we are taking risk and our firms take risk very strongly in this one particular way. We think about our scariest days as our firm suffering something, but that not necessarily being a result, or that just simply being a result of what happens in the broader economy. We are like our plumbing, our technology ensures that that is never passed back onto the individual customer, and that's a lot of what our systems are designed for. In the 2008-2009 financial crisis, the banking contracts that went sour were not designed under the common rubric that the 3 of our firms trade under, which is where products are centrally cleared and essentially backstopped by a large pool of capital that is protecting all individuals that are trading in that marketplace. So a core amount of the problem of the financial crisis was that there was not this rich infrastructure that's been built in Chicago to help minimize risk to end user market participants like individuals. So part of the value we would feel on our side of our model is ensuring that that risk stops at us, and if one of our firms goes down or is out, then so be it, but that's where the buck stops.
Okay, that's very helpful. I wanted to thank our panel for a couple of reasons. The first, I think the last set of comments really brought to life the extent to which the work that your firms do and that your technology does really does play a critical role in providing the liquidity and the safety to the markets that we all rely on, and we should acknowledge they're just a massive economic engine for Chicago. So in that regard, I really appreciate what the 3 of you do and your firms do, and for you sharing that. And on behalf of all of us, I like to think of our panel as the warm-up act for Io and Scotty, and we might have outshone them a little bit, but we don't want to wait too long because that's what's next. And so we hope you feel sufficiently warmed up to go learn a little bit more about not something as exciting about trading technology, basketball, but thank you very much. Thank you all for participating. Incredibly grateful. Enjoy the rest of the evening. Cheers.